But let me do a very, very quick market update. And I got some new people joining us online. So hello and welcome everybody to the Texas REIAs. The Texas REIAs is the largest network of real estate investor associations and real estate investors in the great state of Texas. 150,000 members, participants, and attendees going back to 2003. And the Texas REIAs provides resources for Texas real estate investors, 25,000 buyers, 257 vendors, training, market updates, and more. And we post market data, real estate investor market data, every month on our social media channels because you need to be a student of the market. And we'll tell you what's going on. We have strategies for up markets, down markets, and sideways markets. So we're going to tell you what's going on and what to do in each market. So let me give you a little market data right now. This is the Texas Roundup. I'm going to just do the Roundup. The average price house in Texas right now is $425,000. It is up 1% and only 1% from 1 year ago, basically flat. Median price in Texas, $334,000, $335,000, down 1% from 1 year ago. It's flat. Okay, but if you want to just look at one number that's kind of the barometer of the market, the most important number, it would be this number right here, months of inventory, months of inventory. What is months of inventory? If you took all the houses in the MLS, all the houses for sale, and you stopped adding any more, okay, nobody else has put their house for sale. We're just going to sell the ones we have until they're done, until the shelves are empty, until we're out of houses. How long would it take before we ran out? And the answer is 5.6 months. Which is also the average amount of time it takes to sell one house. Now, that's the average. Some houses sell much faster. Some houses take much longer. That's why they call it the average. But the average is 5.6 months. We have 5.6 months of inventory. Let me put that into perspective for you. They say if there's less than 6 months of inventory, okay, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. What kind of a market are we in right now? It's a seller's market. It's a seller's market. Yeah, look at the number. Now, a lot of people think, oh, the market's not as good. That's true, because a year ago, we had 4.8 months of inventory. That was a pretty good seller's market. 5.6 months of inventory, that's not much of a seller's market, but technically by the definition of a seller's market, it's actually still a seller's market. So how come we haven't gotten into the buyer's market? Well, let's look at the history. 2021, prices went up 18% in 1 year. 2022, prices went up another 10.7% in 1 year. 2023, flat. 2024, flat. Except at the end of 24, it went up a little bit. Why did it go up a little bit? Because at the end of 24, interest rates went down a little bit, but not much. So what's going on and where's it going? Well, here's the thing about real estate. Real estate doesn't really care about anything other than two things, supply and demand. It's pure supply and demand. What's the biggest thing that's changed over the last several years? Interest rates. Interest rates went up. Now, when interest rates go up, what happens to home prices? Do they go up or do they go down? What do you think? Okay, got some ups and some downs. Yeah, I think you're right. You're all right. So yeah, here's the thing about interest rates. When interest rates go up, loans are more expensive. Payments are higher, and houses are less affordable. Fewer people can afford them. And when fewer people can afford them, demand goes down. And when demand goes down, that pushes prices down, for sure. But there's an offset. What's the offset? Normally, 2/3 of the houses for sale are resale, and 1/3 of houses for sale are new construction. Right now, it's inverted. What happened to all the resale? Why aren't people selling their house? because they got a 3% mortgage and they don't want to give it up. They should be. People have jobs, the economy is not bad. People should be saying, honey, let's get a bigger, nicer house, but they're not. They're saying, honey, we got a 3% mortgage, I don't want to give it up. Let's stay where we are. So all of that supply is being held off the market. So when there's less demand, but then there's also less supply, what happens when there's less supply? Pushes prices up. We got things pushing down, we got things pushing up. In fact, speaking of supply, I don't know if you're all aware of this or not, but we are in the middle of a housing shortage. Who's heard of this? We have 6 million fewer houses. We haven't been building enough houses for all kinds of different reasons than we need for the number of people that need a place to live. And we don't have enough supply. What does that do to prices? Pushes prices up. We have another problem or issue or opportunity, depending on how you look at it, in Texas. Think about this. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Yeah, we know where they went. And then there's another 12 million people we don't know where they went, but there's a bunch of them here too. And they all need a place to live. Okay? So there's all kinds of influx migration, right, that's pushing demand up, okay, which pushes prices up. So we have things pushing down, we have things pushing up. When you put all that in a blender, what do we got? We have a flat market. We have a flat market. Inventory's been growing, but the market's still technically not much of a seller's market, but technically it's still a seller's market. So I'll give you a quick forecast, and then we'll wrap things up. Here's our forecast, and this comes from the Texas School of Real Estate, A&M, and a bunch of online sources. We're not here to bias you. When the market's going up, we tell you it's going up. When the market's going down, we tell you it's going down. When the market's going sideways, we tell you it's going sideways. We have ways to make money in all those situations. But here's the forecast. If you were looking for some exciting market bottom, that was probably it, and there wasn't much to it. We expect, because the Fed tells us this, that interest rates will go down a little bit, probably another half point by the end of the year. And that will juice the market, but not much. It'll help the market, but not much. So we expect the end of the year to pretty much close out flat, maybe to be up 1% because we get a little juice from the interest rate, but there's just not much happening. So it's going to stay where it is. And it's a great time to invest. You know, sometimes it's easy to buy and hard to sell. Sometimes it's easy to sell and hard to buy. It's never easy to buy and easy to sell. But in this kind of a market, all the strategies work. It's not hard to buy, it's not hard to sell, and it's a great time for real estate investors.